Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back with another weekly video with our friends at Strategas. Today, we are thrilled to be joined by Dan Clifton, head of policy research with the firm. Dan, thanks so much for joining us.
Thank you for having me today. An exciting day to talk about what's going to be happening in Washington.
Truly no shortage of things to talk about. And, off air just a second ago, you mentioned that the upcoming 3 to 4 months was maybe as busy or as packed a calendar as you've ever seen. And we just went through the COVID-19 pandemic. You've been doing this for a long time. So to say something like that must mean there's a lot on the agenda. So will you tee us off with talking through what we get to talk about today?
I'm calling it the September to remember. We're probably going to say that about the October and November to remember as well, as we start to think about this second half of 2021. And let me say, I've been doing research for institutional investors for 14 years on Washington policy. I've been involved in politics for 25 years. This is going to be some of the most consequential policy items that I've ever seen in my lifetime as we start to think about the next 6 months. What you are going to see is resolution on having to raise the debt ceiling, how to avoid a government shutdown, how to pass a bipartisan infrastructure deal, how to do the largest fiscal policy package in our lifetimes, which will involve significant tax increases and spending increases. And then finally, the Biden administration will have to make a decision about whether to reappoint or appoint a new Federal Reserve chairman. That is a lot for investors to be chewing on in the second half, all while we continue to see ups and downs in the coronavirus coming back and forth. So I think it's going to be a very exciting time. At times, it's going to be volatile. And I look forward to our discussion today to kind of outline these big issues that we're going to be facing over the next few months.
Yeah, that's a great way to sum it up. And we're talking here on Thursday morning, a bipartisan infrastructure bill, passed last night. There's still plenty of steps to go. Could you talk us through that briefly and kind of how you handicap the odds of it passing in current form?
Yeah, so if you remember back in March, President Biden put out a proposal for $4 trillion of new spending over the next 8 years. So he was basically saying, I want to spend $500 billion a year. What you saw last night was the first piece of that broken off from the larger package and put forward as a bipartisan infrastructure deal. We started the debate last night. We anticipate that the Senate will pass this bill sometime early next week and send it over to the House. The House is probably not going to pass this until September, so we have a long way before it gets into law. But these provisions were the core highway, roads, bridges, sewer, water, airports, rail, core infrastructure. And from that, the beneficiaries of that are going to be companies involved in rebuilding bridges or laying down concrete. You're also going to see beneficiaries in the communications area, which deal with broadband. We got as granular this morning in our note about dredging companies as we start to dredge our ports so they can allow larger shippers in there. And I just know that investors have become sensitive to the numbers. Trillion here, trillion there. A lot of people are worried about the U.S. debt as they should be. But when you spend this much money, there will be an earnings benefit that feeds through. And I think that this, from a stock selection perspective, is going to be a very important bill. Less on the macro side. I don't think it's going to impact the dollar very much. I don't think it's going to impact bond yield very much, largely because most of the spending will come out in 2023 and 2024. But from a stock-specific perspective, there are a lot of winners in there, and we've been detailing those winners in our reports.
Right. That's really that's an interesting way to compare it with a macro versus micro on the size of the budget. Or I'm sorry, on the size of the bill, because the next priority, as you mentioned, is a multi-trillion-dollar bill that they're looking to pass on a kind of a party line reconciliation basis. That's going to have implications on the micro and the macro. It's so large. So could you talk about that briefly and briefly for a multi-trillion-dollar bill might mean something different, but yeah.
Yeah, I think people have to remember is that if the bipartisan infrastructure bill passes next week, the Senate Democrats are immediately going to go to the first step of passing that $3.5 trillion bill. That requires the Democrats to pass a budget, and the budget opens up a window called the reconciliation window. That will dictate how much spending and how much taxes can be raised, and do so with a majority vote in the United States Senate. There are no tax increases, and there is no $3.5 trillion spending package without the budget passing first. And the Democrats have been telling us as of last night that they have the 50 votes locked up. So you're going to see that window get opened up before Congress goes on the August recess. They will not be able to actually take up that legislation until we get to October 1st. And the reason for that is Congress doesn't come back till mid-September. They're going to have to deal with the debt ceiling, the continuing budget resolution, and only after that is done can they move to the larger spending and tax increase bill. This is not going to be easy. The House can only lose 3 votes. The Senate can lose 0 votes. And you're talking about significant tax increases and spending that, quite frankly, isn't as needed at this point, given that the pandemic is somewhat waning. So I anticipate that bill's going to get winnowed down into about a $2 trillion package over 8 years. I anticipate you'll have higher corporate income, capital gains, dividends, and estate taxes, but nowhere near at the level that President Biden had put forward. And we're anticipating that bill will pass by Christmas, or right by the end of the year. One caveat to that, I would watch a couple of dynamics around this debate. One, what is the inflation readings? We see more Americans are worried about inflation and unemployment. That's a sea change in my lifetime in politics, because inflation has been restrained. Inflation is high. It reduces the appetite for a large spending package. I would also watch the September 12th or September 14th California recall election, where if the governor of California, in a very overwhelmingly Democratic state, does get recalled, I think that's going to be a political tsunami here in Washington about what is the best way to approach government spending and the pandemic itself. That's not our base case right now, but those polls this week moved to 50-50, and the people who want Newsom out are far more motivated than the people who want to keep them in. So when I tell you this is what I think is going to happen by the end of the year, I want you to know that there's a lot of external factors that are going to change it. There's going to be a lot of twists and turns along the way, but that's where we think we're going to end up. $2 trillion, some tax increases, and a lot more spending by the end of the year based on what the Democrats are proposing.
Well, we won't hold you to it too closely. Handicapping this stuff is incredibly difficult, and your team is one of the best in the business. So we'll stick with you for this one. So last thing, we could talk to you forever, but we're wrapping up on time. You mentioned debt ceiling. I think the headline volatility associated with, approaching a debt ceiling and needing to pass that. And you've written before how nasty these debates can get. Can you just hit on it high level and kind of talk through how you're handicapping that as well? And then we'll get you out of here. We appreciate the time.
There's nobody in Washington who wants to have a debt ceiling run like we saw in 2011, which ultimately resulted in the U.S. being downgraded over its political process. And so what's happening here is that we're trying to figure out how to get the debt ceiling up. Quite frankly, we just talked about the Democrats spending $4 trillion, and no Republican is going to raise the debt ceiling to do that. And so there are really 3 main options. None of them are good options. That tells us the headline risk in September is going to be very high around the debt ceiling. Headline risk is different than real risk, but the process is almost as important as the outcome. And so number 1 is that the Democrats can raise the debt ceiling as part of budget reconciliation. They can do that with 50 votes, but they don't want to do that. Number 2 is that you can couple this bipartisan infrastructure bill with the expiring government budget and the debt ceiling. I had 17 Republicans in the Senate vote for the bipartisan infrastructure deal. You only need 10 really to raise the debt ceiling. Maybe that's the way it comes together. And then the third option would be a short-term debt ceiling increase on September 30th. Republicans help, they get it up, Treasury can issue a little bit of debt, and that carries the Democrats over to when they will consider the reconciliation bill. And the Republicans say, okay, you want to spend $4 trillion? It's on you now to raise the debt ceiling. So those are 3 options that we have in front of us right now. None of them are good. That tells us there's going to be some volatility around the debt ceiling in September. And investors are going to have to anticipate some of that volatility, even within a pretty strong economy, very good earnings. Sometimes these political issues are temporary headwinds, and I'm expecting the debt ceiling to be that.
Well, that's why we appreciate having you around. We'll keep reading your stuff, keep chatting with you. And this has been super informative. I can't tell you how much we appreciate it. And thank you for the time.